It's great to be here. Look, after that earlier panel, I'm going to post my telephone number up here, my home number, so someone can call my wife and tell her that things are good. But in all seriousness, I think it is exactly true. I think there are a lot of comments about there's a lot of positive signals out there in the water sector, municipal, industrial, for a number of reasons, which I'll hopefully touch on. So, my name is Reese Tisdale. I'm the President and CEO of Bluefield Research. We are a market research firm that helps companies figure out what's happening in water, wastewater, energy, mining, municipal, you name it. We try to find where those opportunities are. What I'd like to do today, I think we've got about 45 minutes or so. I've got about 10 slides. It's a potpourri of slides that I threw together just to kind of give an idea of what I think or what Bluefield thinks is happening. Some of them are forecasts, some of them are value chain, companies in space, how they're competing, differentiated from one another. I'd like to go through that, certainly open any questions thereafter, but maybe after the panel. So I look forward to going through this with you. So, Bluefield, as I mentioned, this is my only promo slide. We help companies, everybody from technology vendors all the way to industrial water users. They buy our research, they use us for consulting, they use our annual insight services. We look at things globally. A lot of what I'm going to talk about today is focused on the U.S., but I think it's really important to understand that a lot of the technology innovation services does happen in the U.S. And we talk about M&A specifically. It's a big part of that. Look, quite honestly, everybody's talking about infrastructure. It was infrastructure week last week. Who knew? Given what was happening in the news. But the reality of it is, everybody knows there's an infrastructure problem. The municipalities know it, the government knows it, the suppliers know it. The bottom line is this is a historical trend of where money is being spent. O&M versus capital. Bluefield, we've done the forecast going forward. CapEx, our forecast looking at capital improvement plans for municipalities. We've got about $532 billion that's budgeted, planned over the next 10 years. It's not a retrofit. There's new build. The economy's rebounded. Housing starts are looking up. There are a lot of changes. And what does that mean? It's impacting the supply side. When you have new build, you get to do new things, which is great in the sense new pipe materials, new solutions are able to be added because you're not working your way back into an existing system. So I think the other thing is, with the discussion, which I think will be touched upon later in the forum, public-private partnerships, with there's new funding available. And I will say everything I say, there's no shortage of money out there. I mean, it seems there's private capital champing at the bit to get involved in water. There are a lot of hurdles, whether it be cultural issues, whether it be scale, whether it be fragmentation. There's money out there. The other part is there's technology out there. Many of you guys have this, many of the companies here have this technology. It's penetrating the markets, municipal and industrial, to get in there. So, like I said, just looking for solutions. Bluefield Research, we do a lot of work looking at, all right, what's innovative? Municipal reuse. Two years ago, we really started looking at it. We like to look at it from a project-by-project basis. This is municipal. We had about 150 projects in our database. Looking at them, who's developing them, where are they happening. We just did an update a couple months ago, 650 projects. Maybe 700 at this point. We're continuing updating that. The point is, we're getting better at what we do, but more importantly, I think the real opportunity is that municipalities and utilities are looking, and industry, because it's an opportunity for offtake, risk mitigation. We're seeing things like fracking. They're able to tap into wastewater systems to use that water that would either go into ocean outfalls or sent downstream. It's an opportunity, save money, be more efficient. It's all about doing more with less. But of it obviously is going to irrigation. That's obvious, you know, look, with all due respect, everybody's touching the water. You know, I'm not into that because who wants to talk to municipalities about risk mitigation on their end? Whoever touches the water, as we've seen in Flint, it opens you up to a lot of things. So, but when you start looking at industrial, it's an opportunity. Also, you know, irrigation's opportunity, potable, that's going to continue to grow. I think that's the panacea that everybody sees. We've seen it happen in places like Singapore. There are projects happening. I mean, the first potable reuse project was in Texas, the U.S. There's no policy to streamlining things at this point, where they're working on it. California is obviously, even after the drought, is a big play. Smart water, this is what everybody gets excited about these days. We've already talked about digital water. There's a lot of opportunity. I can let Trevor talk about some of this. He's in this space. But it's kind of amazing. There are a lot of logos up there. It's pretty incredible. I think there are two things about the slide. You've got extremes. You've got the Silicon Valley startups all the way to the industrial diversified companies. I mean, companies like Trevor's company is one, but also then you go up to Honeywell. Companies like Honeywell, Xylem has just spent a bunch of money to acquire Census this past year. Honeywell acquired Elster a couple of years ago. There's a lot happening. Okay, so like I said, no shortage of solutions and technology. One of the challenges is everybody says, there are 50,000 water systems in the U.S. How am I going to get into this? Even if you find one, it's fragmented within the utility itself. Every office or arm or division, however you want to look at it, whether from customer management to the back office, to network and distribution, to demand management, that's for industrial, I should put those top three, they don't always talk together. They use different solutions sometimes. They have different goals, objectives, incentives. So what's happened is companies are now starting to sort of find their space. There's no one-stop shop, which is great. It's a great opportunity. It's a great opportunity for consolidation. But if you go talk to the utility, I think they would all say, if they had a nickel for every time someone came into their office offering the next greatest technology, they'd all be rich and they would be at the utility. There are cultural challenges, there's brain drain, I mean, these are all issues. But what I think my last point would be, it's happening. There are solutions happening. And let's talk about Xylem. They have wastewater pumps. They're making the Concerta pump. They're making it smarter. They're going to install these systems into these utilities over time. It is going to take time, but ultimately there will be penetration of smart solutions into these utilities, because they're also supplying other industries as well. It also exposes us to other risks, things like cyber-related issues. But look, the market is, I didn't show it, forecast, but I think our forecast, which we just put out, analyzing on a smart water, and we're broad about it, looking at smart water overall, and that includes everything from meters to leakage management to pipeline conditioning monitoring, is about $20 billion. So moving on, over the next 10 years, that is. M&A, we talked a bit about this earlier today. We've been tracking, over the past 3 years, we have more than that, but we've got about 450 M&A deals through 2016. There's a lot of interest in water, without a doubt. This is a simple trend, but basically, just to make it simple, I think I put it up there, $20 billion of M&A in 2016. This is global. The lion's share of this is in the U.S. One, I think it's where we are. I think it's where a lot of activity is happening because of transparency, because of technology and such, and services. But if you look at it, the dark blue is really, we're the technology space, technology, equipment, services. You do get companies like Xylem buying Census would be there. EQT buying Innovyze would be in there. Those are big deals, and those are, the EQT Innovyze was just at the start of the year. You step up, you look at investor-owned utilities. These are in the U.S. Everybody talks about privatization of water. 50% of the U.S. water market is supplied by private companies in different forms. The big ones, the elephants in the room, the American Waters, the Aqua Americas, they're the ones that everybody hears about, but there are a number of others. They're doing different things. They're getting into market-based solutions. They're providing services. They're working military. They're in the energy space as well, supplying water. But they are buying deals. And what's happening in that space is there is a bit of a, I'll say, reconvergence because it's happened in the past. We're seeing power companies, gas, critical infrastructure, if you will, companies looking to get into the space. They're looking for scale. They're looking for opportunity. They understand rate bases. They understand what's happening, and they think they do. I think water is going to be a challenge without a doubt. Eversource bought Aquarium 2-3 weeks ago in the New England area. It was about a $1.7 billion deal. But Eversource is a power company, the largest power company in New England. They buy Aquarium. It's owned by Macquarie. Couldn't have. So far, it doesn't seem it couldn't have worked out better because private company to private company makes life a little bit easier. Aquarium's probably keeping up with the systems, and there are a lot of distressed assets out there in the water space that, I think that's what scares outsiders looking in, as I'd like to call them, as they look in and say, oh, that looks like a great asset. When you go in and then you realize you got to spend $150 million on pump upgrade, network upgrades, then it's a bit somewhat distasteful sometimes. So, and then lastly, there's the, which has less of an impact in the U.S., and that's sort of assets. We're seeing some deals where companies are buying, like Epcor buying a water pipeline in Texas this past year, but we also see desalination assets in the Middle East, utilities in Brazil being sold. Those are sort of other opportunities that global companies are looking at. Everybody's talking about GE Suez, so what I basically, this is big water getting bigger. The GE Suez deal. Suez is really looking at the deal as I think it was a great opportunity. It's GE, but it's an industrial and it's a U.S. play. Suez has a strong presence, obviously, in Europe because of where they're from, but also heavy on the municipal side. Industrial is where a lot of activity is happening. I think a lot of companies would rather deal with a private company than a municipality in many cases because you're not dealing with city councils, commissions, and so forth, less public pushback. But this is these are the largest water companies that are ranked by industrial footprints, largest industrial water companies in the world, some of them. And so what you can see is Suez jumps up pretty substantially. It'll be interesting to see what happens, once again, culturally, what happens within that company, but that happens in any transaction. Energy. Everybody's excited about energy. So oil and gas. We just released some research on hydraulic fracturing, analyzing company strategies, forecasting the market. This is a forecast using a straight line rig count of about 650 rigs across the U.S. for horizontal rigs. And absolutely, you can see the ugliness of what happened. 120 bankruptcies over the past 2 years in the energy space. It also impacted all these pure play water solutions providers in the fracking sector, in hydraulic fracturing. And it's exactly, someone said it earlier, at $112 a barrel, who cares? Katie barred the door, let's put those holes in the ground, let's go. When it's $25, $30, $40, $50 a barrel, even now, it actually makes a difference, particularly when the volume of water being used has tripled, quadrupled in some cases. I mean, the Permian is a good example. Absolutely, there's a lot happening in the Permian. It's transforming hydraulic fracturing, not only transformed the energy space, it's transformed the power sector, which I'll get to in a second. Gas is king now. Coal is not king anymore. I mean, that's just the way it is. I think you read the press, that's what's happening, but it's transforming what's happening. Gas coming out of the Permian is going to make it even that much more so. Everybody seems to have been focused on the Marcellus for hydraulic fracturing gas. But as a result, water usage is massive. As you can see, the biggest cost is transport, whether it be pipes and trucks. You know, a lot of that is just getting to disposal wells. Flowback is generally treated, reused. Produced water is always a big issue. So what ends up happening, even if you have a flat rig count, your produced water volumes are going to continue to rise, you know, overall. So I think the volume, you know, we're looking at $136 billion on water management for hydraulic fracturing in the U.S. over the next 10 years. It's pretty substantial. I mean, it's actually incredible. So the volume of water, 20 billion gallons of water being moved, it's really, really substantial. Now, there are hot spots for treatment. The treatment levels in the Marcellus shale are at 65, 70% of that water treated, partly because it's so expensive to transport the water. There are 8 disposal, 9 disposal wells in the state, so they can truck it to Ohio, but when they're paying, you know, $15 a barrel, it's not, they're not that excited about it. As a result, what we're seeing is and I think after the shakeout, we're seeing midstream water companies step into this space, which I think is really exciting. Oil and gas players, so let's say like Antero or a Rice, they're stepping in and saying, hey, we can manage this water. We're going to step in, we're going to move it, we're going to treat it, we're going to reuse it, we'll dispose it, manage the whole process. A lot of private equity going in there, private capital going into that space, which is really exciting and interesting. That doesn't mean that the companies like Nuvera and Select, these are pure play water companies that have been in that space. They seem to survive the shakeout over the past couple of years. A couple of them merged. There's been some transformation in that space, but the upside is there's growth, even if at a flat rate count. There's opportunity, and I think with the discussion of environmental regulations, seismic activity in places like Oklahoma, I mean, obviously we talked a little bit about it today in Texas. Seismic activity is an issue, and it's going to drive reuse, and the hard part is all the different types of produced water, the different salinity levels and such make it difficult. But nonetheless, smartest people in the room oftentimes are in the energy space, so I think they're figuring it out. So I think that's exciting, and I guess we're in Texas, so it's exciting for Texas. Lastly, as I talked about how are things being transformed, the power sector is undergoing its own shift with fuel switching, particularly in the mid-Atlantic states. You're seeing, you know, the coal states, you're seeing a lot of activity where the power companies, whether they be the utilities or IPPs, are saying, you know, let's just shut these coal plants down. It's not cost effective, they're less efficient, they're old, there's no sense in dragging these out longer than we have to. We're facing environmental regulations, dealing with coal ash ponds and such. So it's easy, gas is cheap. Gas is, I think, knock on wood, wherever there is some, gas prices aren't going up anytime soon, given what's happened in the Marcellus, for that, in Marcellus and Utica, but also in places like in Texas as well. So when there's new build, that's the opportunity. There's no sense in taking a system that is already operating on low margins and trying to force them to install a zero liquid discharge system. It doesn't make any sense. I think the operators or the owners think, well, this is ridiculous. But if they're going to install a new CCGT plant or system, absolutely step in and do it. Things are changing on the power space. A lot of it has to do with energy. So with that, as I race through those slides, hopefully they follow up on a lot of the themes we talked about this morning, which I appreciate. I think there's a lot of energy in the room. We're here. I think we all want the water sector, more broadly speaking, to do well. Like I said, there are a lot of solutions out there. There's a lot of money. It's just figuring out how to get in, how to penetrate the demand side of the equation, because that's where a lot of the challenges are. So with that, thank you very much, and I'll pass it on to the next speaker.